be a I can be a good person for you all to share my experiences in raising angel investments, what is VC investment and all. So starting from let me share my slide actually, that will be more helpful for you guys. Can you please give me the access to share?
Yeah, yeah.
So you can check now.
Okay, yeah, thank you. So are you guys able to see my screen?
Yes, sir. It is visible.
Okay, thank you. So basically, when we are planning for some startup, or if we have some idea, uh, then what happen basically, we need some funds also. So that is the basic idea for angel investment or any kind of investment we need. Let's say we create a team, suppose we have someone got some idea, then to work on that we need some team, product team, development team, marketing team, finance team and all. So most of the time, if you are not getting the right co-founders who are ready to work with the sweet equity thing, then you have to hire people. And if you are going to hire people, then you need some funds. Most of the time we don't have sufficient fund, and the idea is very disruptive kind of thing, like the very unique idea you think like this can change the market scenario and complete market dynamics. In that case, basically, to create your product, you need some investment. So there are different type of investment uh, which you can raise for your product. uh, so these are basically the options which you can opt to raise the fund basically. So in general, there are two type of investment options for you guys, non-equity investments and equity investments. When we talk about non-equity investments, it basically means the debt funds. You might have heard about that. Like someone is providing you loan, you can consider banks or your relatives or someone, HNIs or individuals which are ready to uh, give you the fund, but in return they want mm, the interest thing. After a certain period of time, they ask you to return the fund with some interest. So this is not always advisable for the startups, because you are struggling to create your product. You have to go to market, you have to generate some revenue. But if someone is already there sitting on your head and asking for the interest thing, then you are not able to repay them. So for in that case, basically equity financing is a good option. So when we talk about financing or investment, uh, in that case angel investments or VC firms came into picture. And when we talk about angel investors, let me go to another slide. Yeah, so when we talk about investors, so who are basically angel investors? So let's say I am working in entrepreneurship from past 7 years, and I have already experience in different fields, and I have enough fund also, which I want to invest in multiple ideas, but I don't have much time to work on all those ideas. So what I will do, I will look for some good ideas, some good startups, and I will provide them some money so that they can build that product, that startup. And even I can provide them mentorship also, because I already have good exposure to the industry. I have good connections so that I can help them to grow simultaneously my money with them also grow. So basically angel investors are HNIs who are willing to invest individually. So basically angel investors are individuals who invest in startups. So their ticket size is not much because they are individual investors. If we talk about Ratan Tata and Ambani, so they can do bigger ticket size, but in general the HNIs don't have much that much fund, so that uh, they provide like a small fund. So let's say you have got some idea and now you have to create uh, a product out of it, but you need some investment to work on that. In that case, you will approach some angel investors so that they can provide you some guidance, they will provide you some funds uh, to create that product basically. So at idea stage you need investment that falls under seed investment or seed capital. The seed capital basically is required to build your product. After once you are ready with your product, then you have to place your product into the market. Okay, so again the angel investor can come into picture and they will provide you more funds, or maybe if you have more disruptive idea, then you have to go for the VC round so that you can place your product and you can scale it to a larger level so that not any other person can easily copy that. You want to disrupt the market actually because you have very unique and very disruptive idea. Let's say for an example you can take the example of Oyo rooms. You can see like or even Swiggy and Zomato, or you can say Paytm also. So when they come at the earlier stage, they were providing too much offers, too much offers, too much offers. Why they are doing that? Because they were actually burning their investors money, but the purpose is to create a big brand out of that, so that in future nobody can copy that idea and can uh, create a competition to them. So that is the idea there, to disrupt the thing. In that case you have to go for the VC capital. VC capital uh, basically venture capitalists are some organization or some company who has multiple HNIs in their network. They raise money from their network, other angel investors, and then they collect the money and they put money bigger ticket size in startups so that they can scale in a better way. So I think I'm clear on investors and VC investors. If you have any doubt, you can ask in middle also, because I don't know, like we don't have much time. So, and we have like more like 40-50 people. So we can continue with the QA session also. I don't want the session to be boring. So it should be interactive.
If anyone has any doubts, you can put in the chat box also, and either you could ask it also.
Okay, great. So coming to, yeah, I have actually explained this thing also, debt funding and all. So in detail, when we talk about debt funding, so when most of the time, like you don't have that much disruptive idea. Let's say you already Swiggy is there, Zomato is there, and you want to create another uh, Swiggy or Zomato out of your idea. So in that case, and that is a validated idea already. You know, there is not much risk there. You just have to list the restaurants on your platform, and then you have to start selling it. Okay. So in a particular location, let's say, so in that case you don't need much funds always. You have to start in a small region. And what happens in these kind of ideas which are already existing in the market, so the valuation thing maybe let me talk about valuation thing first. Every startups come idea or a startup comes with a valuation, and when we go for any angel investor or VCs, uh, they ask you for some equity thing. Equity means they want some uh, stake or share from your company. It's like they want to come into your board of directors and into decision making process. But uh, let's say you need like 3 crore rupees, and they put your valuation of your company or idea like 100 crore. So if you need 3 crore and the valuation they are putting is 100 crore, then you have to give them 3% share out of that. Just to simplify the calculation, I put 100 crore and 3 crore. So you need to dilute your 3% equity to them. But let's say the idea is not that much disruptive, and your idea valuation of your company is like one share only, 1 crore only, and you need like 50 lakh or something, that 60 lakh or 50 lakh. So if you ask for the money, uh, they will ask for like 50 to 60% equity in your company. So in that case, you don't want to dilute that much. You don't want to give 50% or 60% of your company to someone. So in that case, people go for the debt funding, because there is not that much risk, and from day one you can start making some money. So you believe that after a certain period of time, when the valuation of your company goes up, then you will go for angel investment or VC thing. So in that case also people go for that debt funding. In many scenario, like the founders have already much experience, and they know how to run the business and all. They know how to bear all the risk and all, but they don't actually want someone in their decision making process, their board of directors. They don't want to dilute any equity. In that case, they go for the debt funding. But debt funding always comes with much liability, and there are much chances, like if the company fails, then you have to repay, the directors have to repay it uh, anyhow. So but in case of equity funding, if company fails down, you don't have any liability and you don't have to repay any amount, because angel investors share your liabilities together, because they already have company share with them. They are ready to bear all the risk. So this is basically why people go for debt funding, and why for equity funding. So for startups, equity funding is always preferable, but nowadays it's like many investors opt for like both thing, some percent of equity funding and some percent for debt funding, because they also want to play safe. Okay, so might be in future, or might be if someone in your like group is already working on some idea, then you might be facing these things. Uh, but it is always advisable to go for the equity funding thing. I already have explained this thing earlier. What is VC investment? What is the difference between angel investor and VC investor? Okay, so one thing is left here, like when we talk about different stages of investment, you can say. So um, at the idea stage, we need seed investment. After that, once our product is ready and we are ready to go to market, then we have to uh, go for angel investment to place the product into the market. After that, you might have heard about series A, series B, series C. So that generally falls under like VC investments. where you raise higher ticket size to scale the business. So at idea stage, you have to ready the product in, and after that you have to place that product into a uh, market. So most of the startups which are working on a new idea, basically they have to work on the MVP model. You might have heard about MVP model. MVP model is basically minimum viable product. So once your product is ready, you want to test it, you want to check it if your idea is uh, being liked by your customers target audience or not. In that case, that is very important actually. So in that case, uh, uh, maybe if you put more money in that and your idea is not being liked by your customers, then the money will be like wasted. So this is basically how different stages of investments work. So first you have to go for the seed fund, then you have to go for the uh, here I have mentioned early stage capital, that means for the angel investments, and later to scale that product. Once you are sure that your product is being liked by your target audience, then you have to go for like a bigger market. Like you can say one you have started from a particular location or city, then you have to go to other cities, multiple cities, and for that thing you need more funds. So the VCs check this thing also basically. Like if you have uh, something already, MVP is running, then if you are able to replicate that into multiple locations or not, that is what we call a scaling of a business. Like what you are doing at one place, if that can be done for the multiple locations or not. So then VC capital will be helpful there. So any doubt, guys?
Sir, we have a question in the chat box.
Okay.
Suraj is asking, what are the different rounds of fundings and how can we secure them for our business?
Yeah, so I was talking that only. So different rounds of funding are like seed fund. At the idea stage, basically you go for the seed round to develop your product. Let's say if someone is working for metaverse project, then to create your product also, like your own metaverse also, you need a huge investment. Then might be angel investors are not sufficient, then you can go for VCs also. But VCs also provide you seed fund in the first round to create your product, because you don't have any product at the idea stage. Okay. After that, uh, uh, once your product is ready, then you will go for like angel investment, or if you already require much fund, then series A. Okay. So series A is basically to launch your product to few locations to check if the product is market fit or right market fit or not. Okay. After series A, if you have to scale your business, you have to go to multiple locations, or if you have to develop your technology on a larger scale, then you have to go for series B, series C, series D. So uh, mostly for most of the entrepreneurs, the dream is to like go for the IPO. You might have heard about IPOs, initial public offering. So in that case, your company will be registered in public limited company, and uh, general public can invest in your company, like stock markets you might have heard and all. So people can purchase your stock, and they can sell and they can make money out of that, and your company is getting public funds to run your business. Okay. uh, Before that, You can go for like series C also, series D also, even series E also. That totally depends on you and your management team. So most of the time, like people want to delay their IPO stage because they want the value of their share at a higher ticket size. So in that case, they go for next private equity funds thing. Okay, so am I clear, Suraj?
Yes, sir.
Okay, thank you. Any more questions? Okay, something I want to tell, like when we approach VC or angel investors, they come to your company as a team, investment team. Okay, so like your co-founders have, you and your co-founders have some equity and share in your company. They also they also take some share. You guys are putting your sweat and blood to your company, like working day and night, working very hard. They put money to your company plus their guidance also most of the time, because they don't want just to put their money and uh, uh, it can be wasted. So to reduce their risk, they will come to you as a mentor also, or let's say like they can put someone in your team as CTO or CFO, depending on the depending on the like depending on the you can say a skill set of your team. Like if you don't have any CFO or CTO, and then they can provide a CTO or CFO from their side also. Okay, so Mondal is asking what was your motivation behind BRD Nerd. So basically, BRD Nerd is for all uh, at a certain stage of life. You can see, let's say after your graduation, like you all are MBA guys. So apart from our daily daily life, you can say regular life, we are we got much serious about our uh, career. We are more responsible at that stage when we actually started growing our beard. So basically you can say like when we are into our 20s and 30s, or in something in the middle, you can say like when we are in the age of 25 years, so we started behaving like a nerd. Nerd basically means obsessed about something to achieve it, uh, about your career, your goal, uh, about your family. So basically beardy nerd is about that age group which are getting more responsible toward their career, their goal. So in beardy nerd, we are providing like content, regular content to motivate them, news thing to get them updated. Even we are planning for more things, like we are planning for some products also, products in the sense like for that target group, you can say basically from 25 to 45 years people, mostly male. So whatever they need we can provide through it. You can say like male grooming product, gadgets, merchandise, media, everything we are going to provide here. So right now we have started a few months back, and we are right now providing like training sessions, we are providing like media thing right now, but we are working on products also, so soon we are going to add few products also here. And one more thing we are planning here. So everyone is talking about like mental health, mental wellness, and we are talking about women empowerment. But uh, recently we have seen like males are also uh, getting much more affected, and they are doing suicides, they are going into depression. We have seen celebrities like Sushant Singh, and even CCD founder, he has also he died actually, he suicide actually. So we are going to work on male empowerment also here, not just women empowerment, but we are working on male empowerment also with the mental wellness programs and all. How are you managing all these startups and departments at the same time, Ramakrishnan? Actually, this is very tough, but right now I have much experience, and I already have a good team with me, so that managing everything is very easy. But earlier it was very hard. So right now, for all of my startups, I have different teams who are working on that. Okay, any more questions we have?
If you have any questions, you can ask. Sir, I have received a question.
Yeah, sir.
So the question is, for early age startups, what is the time for starting to look for investments?
Sorry,
Let's
your
see.
voice is cracking. Can you repeat?
So the question was, for early age startups, what is the proper time to start looking for investments?
See, so this is there is no any hard fast rule. So you have to see your pocket, you have to see your idea. If you are capable to create a product out of your idea from your own money, or if you can raise some money from your friends and family, then it's good to create your product by your own. But if you have a bigger idea, if you need much investment, then you can go for like angel investors. Even you can approach VC investors if you think your idea has much more capabilities. It totally depends on your idea and your pocket size. So if you think your idea is very have very much potential, and it can be copied easily, then you can go for VCs also. Otherwise, most of the VCs don't entertain these days at idea stage. They ask you for the MVP model. MVP model, basically, that is your minimum viable product, or POC also, proof of concept. So let's say if you want to do something, then you have to show them actually by doing it already for a smaller location. Let's say if you want to create a car, full-fledged car. So to raise a fund for a full-fledged car, first you have to create a prototype. So if any of you are engineer from engineering background, you might have worked on your final year projects or engineering projects. There you might have created some prototype thing. So it totally depends on your pocket size and your idea. Can you share your experiences of most difficult situation faced and how you tackled it? Raj. Okay, Raj, very good question. So creating a team when you have idea, if you got some idea, and if you're going to create a team who like you when I say team, it means your core team, co-founders. So getting a right skill set, a right mindset with a right set, right passion is a very tough task actually. So getting a co-founder is very tough task. I have got many co-founders and still I am working as a single founder right now. Because if you got the right skill set, you didn't get the right mindset. If you get right mindset, you might not be getting the right skill set. If both things are okay, then you didn't get the right passion. So this is very tricky thing actually to get a co-founder. And after that, the investment thing is also very tricky. So when you are at your idea stage, getting investment is very tough. We have raised actually investment from IAN, okay, Indian Angel Networks. They are basically based out of Mumbai. So again, so if you go to pitch different investors, you will get much rejections actually. Because every idea is already there, someone is doing there, someone already has raised some fund and all. So creating your own USP, creating your own uniqueness is actually tough for startups at the early stage. Because if you're going to create something out of the world, then might be that idea will not work in this world also. uh, so like we are like we can say like we are third generation in this technology world. So already our previous generation people are doing something. So creating your USP, founding a right co-founder, and raising investment is very tough actually. You will get many sleepless nights also. But how I tackle it, the investment thing I am telling you, the co-founder thing also I'm telling you. So for the co-founder thing, I didn't get any right person till now, but thanks to my efforts also, I have developed multiple skills. Like I know development, I know uh, digital marketing, I know content writing, I know uh, how to raise funds, I know pitch and creating pitch decks and all. So because I didn't get investment in my early days and I didn't get the right co-founder with me, so I have developed all these skill sets in myself only. For that I have worked very hard, like I have worked like 16 to 18 hours per day. So that is very hard. This is how I have tackled my situation. After that, after many rejections from investors, uh, actually I have different plans. Actually, I was thinking I will not go to investors now. I will focus on my customers and on my sales thing, and that is the best thing actually. To get customers for your business is the best thing. So once you are getting revenue for your business, you can delay your investment round also. So this is how you can tackle this problem, like getting the right investor with you. Even investors are not always right also. Uh, Many times some greedy angel investor come to you. uh, he will ask for some share and all, and you, if you don't know how that person is, so it might be a big trouble for you also. So you guys might have heard about the uh, case study of housing.com. and other startups also. So in many cases, if the investors and founders have like not the same mindset, then it's a big problem. So if the investors have like bigger cake size, they have bigger like shareholding in the company, so they can fire even founders and co-founders also. So I think I am clear with your question, Raj. I think Raj asked, right? Yeah. One more question is there. What should be our future approach if we have a prototype but no business currently? Okay. So if you have a prototype ready with you, you and if you think actually the idea has much potential, you can start pitching to investors. And you, so this is very dynamic thing. I told you there is no hard and fast rule. This is very dynamic thing. So if you pitch to some investor, you will get some feedback, you will get some response from there. So according to that feedback and response, you have to work further. So might be someone ask you for the revenue thing also, like how much revenue you are making right now. If they don't want to take much risk there. Okay, so in that case, if you think you can sell your prototype also, you can try for it. So you can create some community around your product and business, and you can try to sell your prototype stage product also. If they are ready to purchase it, or even not, if it's not sellable, then you can take feedback from the people also. So there is nothing like getting copied and all. Chances are there, but you don't have to fear for that, because no any idea is unique in this world. Okay, everyone, if someone is doing like Oyo room has got inspiration from Airbnb. Even we when we see research means re plus search. We are already searching existing things. When we walked on like bike, we have seen horse. We got inspired from horse, and then we have created bike. We are still measure its power in horsepower. So with aeroplanes, and so with like uh, ships. Okay, so you can ask your target audience about the feedback thing, then you can get more idea if they are willing to purchase your product or not. In many cases, like you can go for crowdfunding also. Like you might have seen about the platforms like Kickstarter and other crowdfunding platforms. There you can create a video of your prototype and a business plan for your crowd investors, and you can put your product there, and you can raise funds from there also. So basically what happens in this crowdfunding, they are your early buyers. Before getting ready, before your products to get ready, they are paying you, so that they, once you are ready with your product, they can take it from you. So they are paying you in advance actually. So this is how crowdfunding works on Kickstarters and all. So Suraj, am I clear?
So I have a doubt, sir.
Yeah.
So you said that earlier you were pitching to companies for for the funds. So while pitching our ideas, so what are the things that we should focus on in our deck so that people buy our idea and invest in our startup?
Sorry, your voice is actually not very clear, so I didn't got it. Hello.
So what are the things that we should put in our deck while we are presenting our ideas to the investors? So what are the key areas that we should focus on?
Okay. So if uh, this could be a separate session actually for the pitch deck thing, but still I'm explaining it to you. Okay, so what investors or VCs see in your pitch deck? So they basically check your idea basically in the form of problem, like what problem you are going to solve, what is your solution, what is your offering in terms of products or services, and then they will see the market size, like what is the market size, whether the idea you are working on has a bigger market or not. Okay, and after that they will check for the financials like revenue thing, if you already have making some money, or if you don't have, then you can show the real data like some survey data, some feedback, some responses from your target audience, like what they are looking for actually and what you have created actually. So these things will help you, and uh, this you can it can be added in your traction report also, like the first stage you can show them like we are at idea stage, in second stage you can show that we have start working on prototype and we have completed the prototype, in third stage you can show like we have interacted with our target audience and we have got these much feedbacks, like 100 200 500,000 people we have interacted and we got this feedback. If you are not making any money, and if you're making money, then you can show that revenue thing there. So these things basically investors look in a pitch deck. And one more thing, USP is also there.
Yeah,
So
got you.
USP is also there, they will look for the USP thing. Even they will look for the team strength also. So if the founders are capable to do that idea or not, so this is also important. So most most of the investors uh, invest in founders actually, if they think the founder has capability to run this business, if they can make profit for them, then they will invest in you. So am I clear?
Yes, sir. It's clear, sir. I got your point.
Okay, okay, any more questions?
I think questions, we are done with the questions. So thank you, sir.
Okay,
Was-
welcome. So this is very small session actually. The topic was very small actually. So uh, maybe in future if we got some much time, then we can discuss more on it.
Definitely,
Okay,
sir.
okay.
It was really great to hear your experiences, and we got to learn a lot from this small session as well. We thank you for taking out time for us and giving us knowledge about various types of investments. Thank you, sir.
Sure, welcome.
As you can leave the session.